Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, December 3rd, 2013. We had a negative day today where they tried to get things going to the upside, but the market internals were just weighing on the attempted price advance all session. Wound up being down on all three sides with the broad market being the weakest versus Nasdaq. And certainly the Dow Jones was the weakest leg of the tripod. The market internals were definitely negative. The advanced declines were minus 1,300 on New York, which was a very poor showing. We were minus 1,100 on Nasdaq. The put-call ratio took a little bit of a pop, but it's not extreme yet. But I think the real tell today was the VIX. The VIX closed up 53 cents and was higher on the day all session. So really just holding back any potential advance all day. Let's move on and take a look at the patterns, and then we'll get on to the levels and bar counts. Here's a look at the YM futures representing the broad market via the Dow. You can see that we had this range expansion to the upside on the shortened Friday. Closed essentially unchanged on the day, but well below the day's open. And today we broke fairly significantly to the downside. We're still well above the breakout from the trend channel, so that's going to be the next real area that we're going to interact with. All right, so here's a look at the ES futures. ES have a similar design, not quite as extreme as the Dow. Didn't get the same level of expansion to the upside, but we do have a new high watermark on the day, and then two negative days following that. So definitely starting to see some weakness in the overall pattern here. Still well above the breakout line, just like the Dow stocks. All right, so here's a look at the Nasdaq side, which is actually even more bearish because today is the first day down. It's an outside day down, made a new high, took out Friday's high, closed below Friday's settlement, and closed down on the day. So this is definitely a potentially very important candle on the chart here, and should definitely put the breakout from the trend channel back in place if we start to develop any kind of momentum to the downside. All right, I'm moving on to the charts with levels. Here are the ES futures. You can see that we're 12 days up into the trending phase of the seeker. Only one potential candle away from exhaustion. All we have to do is make that qualifying push, get some kind of little move to the upside here. There's almost no risk of a recycle here because we just flipped to the downside here. You can see we're setting up a new momentum run to the downside now. So if we get one little decent close to the upside here, we're going to have that 13 exhaustion signal locked in place, and then really start to look for some downside. Now moving our attention to the Nasdaq side. Nasdaq posted the 13 exhaustion on Friday, so today we actually are starting to make good on that signal, seeing some pressure put on the market. So the bottom line is we've got a 13 exhaustion in place on the Nasdaq side, and we are within one candle of it on the broad market side. So this is a pretty big development here. Once we get these two signals locked in, we will definitely start to see some of that released on the market, start to see some pressure to the downside. So resistance on the Nasdaq side remains at the plus 1/8 level to the upside if we can clear today's high. The downside, we've got this open gap, so today's low is going to be important at 34.40. And then below that, once we get into that gap window and start to close it, this 8/8 level is going to be important at 34.3750. Let's take a look at the market internals. We're gaming that 0.85 overbought threshold, never really penetrated it with any kind of authority. We're back up into the midpoint of the range here, so if the market does want to roll to the downside, there's plenty of room here before we get that 1.35 oversold reading to the downside. All right, the Dow Gold ratio did break out of this little pattern that we've been tracking, this little reverse head and shoulders, pushed up to a new high. Actually made a new high today, even though the market was lower on the day. Gold was relatively more weak, so this ratio is still expanding to the upside. All right, here's a look at the cumulative advanced decline figures. Definitely took a hit today. The Nasdaq side is not really leading to the downside, which is probably about the only positive for the market right now, at least internally. We did take that hit to the downside. We're probably going to wind up interacting with this breakout level But for now, this trend is still in place. We'll start drawing some trend lines on here if we do roll to the downside. But for now, we're still just marginally okay. All right, so take a look at the S&P divided by the TLT on our ratio chart. Didn't make a new high here, but we're still in a constructive uptrend here. We're starting to get pretty well up into the area of that trend channel. If we do see a move up into the upper portion of this trend channel, then we're going to really get on guard for the market being terminally overbought. That could happen if we don't really start to roll back down here into December. But for now, this is still somewhat constructive to the upside. Just keep an eye on these last two lows. If we start to make lower highs here in this ratio, we'll see some evidence of traders taking risk off, which would be a confirmation of more probably long-lasting bearish activity. Looking at the individual sector charts here, here's our multi-sector daily chart. Negative action pretty much across the board. I think the big takeaway today though was the breakdown in gold. The XAU did make a new low on the move, and so we're starting to see kind of no real safe haven right now. I have to see if we do see some rotational activity if the market does start to turn down like I anticipate that it will this month. All right, so here's a look at the our major sectors ranked from best to worst. Certainly the standout today was oil services. Oil services in conjunction with the transports were pretty strong on the day. Along with what we talked about earlier, with the cumulative advanced decline not really rolling over yet. That's really the strong point of the market for today. This is probably something that's real positive that a lot of people are going to miss, but definitely keep this in mind. This doesn't mean this strength is going to keep up, but it's certainly the one little positive thing that you can really point to on the day. As far as the bottom of the list goes, the gold and silver was down 5%. So really just starting to wring the last bit of juice out of this lemon. The housing sector was fairly weak. Cyclicals were weak. And then the SOX and BTK, the other biotechs, the other leading NASDAQs were kind of just in the middle of the range here. Here's a look at the OSX, which was our top gun. So what we're really doing right now is just using the static trend line for some support. This is already broken to the downside, so no surprise here that we're starting to see a little bit of late rotational support here. Have to see how this really starts to develop. What we really need to do is get back above this 4-ace line, close above the 10 EMA to go short-term positive. This could really just be kind of a bit of a rest here before we do start to break more to the downside. Transports were positive on the day, not by much. We're still below the risk level of this seeker exhaustion signal, so we're definitely still waiting on confirmation of this. Don't have it yet. If we go back below that 10 EMA, we'll go back down to short-term negative on the chart. BTKs were okay today. We're fairly whippy. We're not that far along in the count, so we could see some more upside before we get an exhaustion here without too much of a problem from the count. Semiconductors still using the risk level from this 13 exhaustion. We had this very kind of gradual lift to the upside here when we got our 13. 13's not very well extended above the 1 bar. So really what you look for after that type of a signal is more of a leveling off and a sideways action. And that's definitely what we've seen. So this risk level is still definitely in play and very important on the chart. Finally, here's the XAU. XAU definitely broke down after this little bit of support from this 9 bars to the downside. We're just hovering above the -2-ace level. We did not frame shift yet. One thing to notice here, though, is that we just finished this 9 bars to the downside, so we're in no way set up for an exhaustion anywhere close to this level. All right, folks, just keep in mind that we do have that 13 in place on the NASDAQ side, and we're very, very close to getting that 13 that will complement it on the ES side. So that's definitely the things that you should really be focusing on at the beginning of this week. As always, thanks for listening. This has been Rich.